Welcome to the 76 Capital Leadership Series. My name is Wayne Kimmel, and I'm your host and managing partner of 76 Capital, the sports tech venture capital fund. And on this show, I get the opportunity to interview sports tech entrepreneurs, athletes, executives who are truly shaping and many times changing the sports industry. I want to give a quick shout out to my producer back at the station, Ty, who is making it all happen, pushing all the buttons and just allowing us to have a great show. You could follow me on Twitter at Wayne Kimmel, and definitely follow 76 Capital across all our social media networks. And if you're an entrepreneur and you're building a company in the sports industry and trying to do the next thing, whether that's in the sports betting world, esports world, sports media, or sports tech industries, please reach out to us. We'd love to talk with you and see that if we can find ways to help each other. Now let's get right to it. Today's guest, his name is Mike Vorhaus. He is the CEO of Vorhaus Advisors and chairman of Maestro, which is one of our 76 Capital portfolio companies. And you could follow Mike at Mike Vorhaus. Mike, let's get this going. Mike, welcome to our 76 Capital Leadership Series.
Thanks, Wayne. I'm happy and excited.
Well, excited to have you on our show. Excited to talk with you about all the things that you've done over your career, all the things that you're doing right now, and how you're helping so many entrepreneurs build amazing businesses. You know, you are known as someone who truly understands what's happening in the world of media and tech and entertainment. And you've been doing this for many, many years and work with incredible amounts of companies, and just would love to hear, you know, some of the stories, some of the companies that you've worked with and the great successes that many of them had.
You and I have been at this just close to the same amount of time. I'm about a little bit older and a little bit more years, but not that many. So I'm sure the answer is the same as to why you're a successful investor and advisor to companies, which is pattern recognition. You look for signals. In my case, I spend a lot of time looking at data. I talk to consumers through an online survey twice a year that's matched to the U.S. Census. I think of myself on a Mary Meeker level of quality of data. Happy to share that, by the way, with anybody who reaches out to me. And I try to ask myself, a lot of times when people are talking about the future or talking about even where things are currently going, I think in their second part of their brain, they're thinking about how to defend their point of view. I have practiced learning to be thinking in the second part of my brain about how I might be wrong. So here's a POV. Here's why I believe it. Where could I be letting down on the analysis? Where might I really not be getting something else that's going on? Maybe there's data out there. You know, I don't like Clubhouse, and a lot of people didn't pick it on my list. But, you know, the fact of the matter is they got servers telling me they got 60 million MAUs. So my approach to Clubhouse can be different based on different information. And I think it's fun. I think I think it's a lot like what you do. I think it's intellectually stimulating. I mean, I talk to totally cool people, and occasionally, once or twice a week, kind of crazy people. It's great.
There's so many companies, and maybe you go through a couple of different companies that you've been involved with that you feel like sharing with all of us, that you got to know that entrepreneur when people didn't never heard of that person, and now everyone knows that person.
Let's take that caller on line 3. I mean, look, I love DraftKings, and I had the opportunity through Peter Blacklow at Boston Seed 9 years ago to get involved with them, and the opportunity to be financially an investor and a help to them and a friend to them. And you know, Jason Robbins and his partners Matthew and Paul had a vision, and they were kind of Web 2.0. They were like, you know, really analytical, and you know, a lot of times we'd be out at night having maybe a drink or something. Usually I paid the bill back then. Absolutely never again. And they're looking at their phone. And actually, I probably will, just because I actually sent Jason a little gift, a little kind of thank you note when he took DraftKings public. People don't think of it this way, but these guys have created a lot of wealth and a lot of opportunity. My cousin worked for them when they were a tiny little company. But anyways, you see these young men, and they were very young back then. And what are they looking at? They're looking at the bets coming in on the custom analytics system they built. Stuff I would never know about. I mean, I still have a Rolodex. So DraftKings is, you know, one of my favorite stories. Oh, and Maestro. Got to talk about Maestro. Maestro, man. I mean, seriously. ask yourself a very simple question. Have you visited China? It's just a really important question. I think if I ever hired a bunch of people, I'd make it a question. If you have not visited China and you have not turned off this podcast, you should go to China because it's where a lot of the future is happening. And through China, I've been about 10 times. Through China, I learned about live streaming 10, 12, 13 years ago. And I believed about it. I mean, I started talking about online video in the public in 2005. And so when I met Ari Evans as a young entrepreneur at Maestro, they'd raised, some money. I think they were in Startup 500 or YC or something. I know Larry Marcus was a super early investor, and Fun Plus and Greg Richardson, through my introductions, invested money in the company. But within the first hour meeting Ari, I knew this was a great macro thesis. And by the end of spending some time with him in due diligence, I knew that he was a guy that was going to grow, and he has. He's scaled to, a company of 40, 50 people. And I don't think we've publicly acknowledged our valuation, but it's substantial for, mid-stage, mid to early stage. And it's about live streaming. It's about making it possible for people to do live streaming, to monetize live streaming, to have tipping, to have chat, to have challenges, to do all the things around the dumb stream itself, and to make software for enterprise and pay-per-view and big names like Billie Eilish. And now I'm being very careful. But I think we've said publicly, and I think if you looked carefully enough, you'd find some product out there. We're very interested in the mass streamer. And we believe that there's at least 10 million people in the United States that could pay between $100 and $1,000 a year for a service that might be somewhat similar to things that Maestro does today for the big boys.
Mike, it's awesome. It's awesome to have you on the show. It's so great to hear about your passion for all these entrepreneurs who, as you said, are truly changing the game. They're changing the world, quite frankly. I mean, they really are. And you're the one guy in the middle of so many of these companies. I have to go back to, you mentioned Jason and his partners at DraftKings. And, look, they have a special place in my heart as well. I mean, certainly they were, right after, even before they acquired VSiN, the sports betting network that was created by the Musburgers, just was always such a fan of what they were doing and watching their business grow. And then, of course, them acquiring VSiN was huge for us at 76 Capital, and I'm really excited about the future there. But I think back, you were saying, and you've been talking about these entrepreneurs and being able to identify them. But when you were first meeting Jason and you were introduced to him, what were a couple things that just were like, wow, I'm going to get behind this guy and I'm going to help him really grow his business?
I'm so glad to be able to talk about this because I thought the book that was written so far in this space was highly inadequate. Look at, first of all, I was not, 30 or 35 or even 40. I was 50 something. And Peter Blacklow goes, oh, yeah, well, it's fantasy sports, real money for fantasy sports. And we're doing this and we're doing that. I'm like, wait, go back. I'm sorry, real money for what? Fantasy sports? I know you're not a sports guy, Mike, but, you pick a team and da-da. I go, yeah, you play that all year, though, and it's like for $10. Oh, no, this is every day, and it could be big money. And I go, so I just want to get this 100% clear before I say what I'm about to say. It's sports and gambling, right? And Peter Blacklow said, yes. And I said, I'm in. I mean, what I wanted to say was I'm in. Where's the booze? Where's the blah, blah, blah? I mean, what more do you want? And then you meet Jason like that night. I think Peter arranged for us to meet. And he's this careful, wonderfully light, warm, just a super young, friendly, but mature personality. And his buds, Matt and Paul, not that much different. And analytical like crazy. They're all performance marketers. They'll probably hate me for saying that. They're all product guys, by the way. Uri Marchand, Ari Evans. I may be a blankety blank marketer, connection, blah, whatever, BS. I love great product guys. I love great product guys with some light technology knowledge too, real tech knowledge. Like Ari's got a double E degree. So I just knew they were smart. I knew they had a macro thing around, and I didn't care. I didn't care whether gambling was approved in a year. I said years ago, it's like gambling, marijuana, prostitution will be like the last thing to go. And I'm not even advocating it necessarily because I think there's an important feminist angle. As a matter of fact, I'm obviously, the feminist angle trumps everything else. But still, gambling, and you just wait. You just wait. And the courts and the laws and the states, and now it's growing like crazy. So it all just seemed super. I didn't know. I knew I'd make $1 million on nothing, but I didn't know on almost nothing. But I didn't know that it would be this big. I never thought about it as my biggest story. I never thought about it as a $20 billion company.
DraftKings is a $20+ billion company today. From the time when you met Jason, when it wasn't, right? But now when you look at the market,
the 60 million, maybe 20 million, I don't know.
But when you look at the market today, the sports betting industry in general, and where we are, and where, as you said, content and media and all the things that are now, look, I haven't brought them together yet because they're not, right? They're not even all there yet. Where do you think this all goes, Mike?
I'm so glad you brought this up. I have felt this way intuitively for a long time. Sports content producers, manufacturers of sports content, which are players, teams, and technology, are media companies. And people have been saying it for years. I think ESPN is a very smart group of guys. I think the Disney people are super smart. I think the Comcast people are smart. I think a lot of people are thinking about this. But I just feel like every one of these guys is a media company and an advertising. And I just think that just builds a trail. Then that means you're an advertising company because sports teams, they make some money on advertising, right? But they make a lot of money on media rights, which are sponsored by advertising. But look at MLB. That's been direct for a long time. And for a long time, it was, I missed it, or I was filling it in, or I'm a voracious user. In the early days, the guys who had the rights didn't want to let the leagues and the teams put this stuff out on the internet. Oh my God, somebody might steal my content. And I just kind of feel like, it's like it's NFL's content. It's like, Belichick's content as far as I'm concerned. And I don't give a damn whether it's, and I'm 63. I don't care if it's on ESPN or ABC. I want to see it live. And if I missed it live, I want to see it controlled. And I want it on every device. I don't know. Maybe I'm an idiot and NBC will be the king of sports content 20 years from now. I'm not betting on it.
Yeah, I don't know, Mike. That's exactly. For the people who can't see, you got to watch Mike's facial expression on that one. But we got Mike Vorhaus here, the CEO of Vorhaus Advisors and chairman of Maestro, our 76 Capital portfolio company, among a lot of the companies that he's mentioned on our show here. It's great to have you here, Mike. And look, you one of the things I definitely want to touch on, and we've touched on so many things, and it's your conversation and your experience and background is just phenomenal. But you mentioned, so twice a year you put out the Vorhaus Digital Study, and your last one came out in April of 2021. And a couple things that just really popped out at me. So you talk in your study that just under 1 out of 5 Americans have made a bet online for real money on sports. And most have used either DraftKings or FanDuel. So when you think about that, under 1 in 5 Americans have made a bet online for real money. That just really talks to what we were talking about earlier, that this market is just getting going.
Yeah. And I think you have to believe that the success of poker when it was legal before it was illegal online, kind of seeded all of this. They say it's a $200 billion illegal business. You'll never see my good friends with, public stock status now talking about this stuff. But, what percent of that's been, look at DraftKings revenues, look at, I can never remember those other guys' name. I know it starts with an F, But whatever, they're in this business too. And what could it be, like 5% of the illegal business? And then how does this change? I mean, do my godchildren who are in their early 20s, do they even know what a bookie is, much less have one? I'm guessing not. And the gambling's more fun. And DraftKings is going to also make it super accessible, and iCasino.
And you know what, Mike, also, you say it's super fun, but it's also super social. And I think that's shocking to a lot of people. You want to comment on that?
Well, yeah. I mean, now we go back to fantasy, right? It's kind of in the, middle American, narrative of, 20 years ago. And even today, I think, the 38-year-old husband, 2 kids, they're both, wife and husband are both working, and he's got that draft once a year. He's going to be there for his fantasy draft, his high school buddies, his college buddies. There's probably as much, fake beer as real beer at that draft by then. And they got, $500. Look, people like to gamble. I don't particularly love Vegas, and I don't particularly like losing money, and I'm not a big gambler, but, I'm not a big gin drinker or vodka drinker either. But I know that, vodka is a very popular alcohol. And I'm a libertarian. Why in the world would I regulate? I want all the fair gaming stuff in place, and I can assure you the first sense any of these companies know any of their users have problems, they're at least as on it as the casinos, if not more. There's assistance. But, I mean, come on. We're going to have an America where pot smoking for fun is legal. In more states, we already have it. In more states, recreational marijuana is allowed than online sports gambling. I mean, excuse me, 1920, prohibition, 1.2%. That's an arcane reference. But, I mean, this is just ridiculous. I'm sorry.
Well, look, Mike, it's coming and it's going. I mean, we're at 30 states now, right, that have passed laws, plus Puerto Rico and DC. And then, as we're taping just last week, Canada, just legalizes sports betting on a national scale across the whole country. Imagine if that happened here in the U.S.
Great. I'd like to look at every entrepreneur and think of a part of a private jet. And I've always thought of Jason as at least a full engine of my G6. No, I'm kidding.
Well, another thing, Mike, you talk about in the Vorhaus digital study is you say, half of Americans have heard of esports, and 1 in 5 of those who have heard of esports watched them either in person or remotely before COVID. Again, to me, that just shows the incredible future growth of what's going to be happening in the world of esports.
And those are adults. That's 18 to 34 predominantly. So this is not even teenagers. So figure, a third of Discord must be teenagers. So yeah, look, people watch video on the internet about people playing League of Legends. How boring. And I'm like, people watch a little stupid white ball get bopped around in the air and I can't even see it. And thank God Fox took care of that problem. And some people like golf. I like esports. This is a theme today for me, right? It's kind of a libertarian media point of view. I don't feel that way about exploitative content, but I feel, why wouldn't people watch people do amazing things in amazing games? They watch it on YouTube taped. And also these people are, you mentioned Musburger. These people are entertainers. These influencers on YouTube and TikTok, honest to gosh, if there's anybody, I don't care if you went to China or not, but if there's anybody at this minute, I want you to, if you're one of those people, I want you to disconnect and go to your phone, forget about us. If you've not looked at a TikTok, you're not in the media world. Seriously, honest to God. And read my article in Forbes. I don't usually do that either. Comparing TikTok and Quibi. I write, I think, a very good article about Quibi was long form and TikTok short form. And Quibi is nowhere, is in 1 or 2 places, and TikTok's everywhere. And short is 30 seconds today. 22 minutes is a long time. Mark my word, the average content on Netflix will be shorter on a moving average over the next 10 years. Measurably shorter.
Well, Mike, we're really happy to have you longer than 30 seconds on our 76 Capital Leadership Series, and you're really certainly dropping a lot of knowledge here. And the other thing I think that's really interesting, and I wanted to touch base on with you as well, and have a conversation with is your involvement in the SPAC world. And I think maybe for our audience here, just to give a little bit of why are you involved with a SPAC, and what do you think what's going to happen with the specific SPAC that you're involved with, as well as the overall industry as a whole?
Thank you for asking. So SPAC stands for Special Purpose Acquisition Corporation, and it is a public entity. It is a public company, just like Tesla is a public company. And you gather your capital in an IPO. Excuse me. However, it's an alternative form of capital. So in fact, these companies are what are commonly called blank check companies. There's no operating company. It's instead a thesis, a vision. And I'm very deeply involved with a group of people who have put together a SPAC focused on gaming and gaming-related content, and I'm a senior advisor to the board. I also serve on the board of two other SPACs, Altamar 2 and Altamar 3, who have both raised their IPO money and are now looking for targets. And the Altamar 1, which was, I think, the largest PIPE ever in SPAC history, our deal was announced 9 or 12 months ago and closed a month ago, and is now trading as a public company called Blue Owl, and trading well, I might add. There's been a lot of froth in this SPAC market, and in fact, both DraftKings and Skills went out through SPACs, and I want to talk for sure about the great benefits of SPACs to capital formation and to governance and to other things. But I do want to recognize that, DraftKings, is still extremely, if you bought the SPAC stock for DraftKings at $10, and today you've got a $52, $53 stock, you've done very well in a year or 11 months or 14 months or whatever the heck it's been. And by the way, Skills trading at 20-something, 22 is trading off at $10, also super good. But also ones like Owl and Desktop Printing, that are only trading 20, 30% up. So I think there's been too much attention paid to a couple of the big high flyers, some of which have crashed, many of which have not. And not enough attention focused on the fact that this is a way to form capital around a founding team, around a management team, to bring in through the merger of the SPAC and another operating company that is private. For instance, one that I like is the Play Studios deal with Akis Acquisition Corporation. Now, is it trading down from the $10? Yes, it is. But I think Play Studios is an incredibly well-run company. I know I've talked to the CEO. I've heard his growth story. I can articulate their growth story around real-world benefits to social casino gamers. These are people spending money on casino-like games with no chance to win their money back. This is skill-based casino, non-real money. That's why I knew about all that when I heard real money with DraftKings. So these are, really, in some cases, extraordinary companies that maybe couldn't have done their business deal as easily through a straight IPO, or maybe they wanted more certainty about who was going to be their long-term investors. Maybe they wanted more certainty about how much money was going to go on the cap table. Maybe they wanted more certainty about the governance of the founding team. It's public record that Jason Robbins has super voting control, as do other people. These appear to me qualitatively to occur at a higher rate amongst SPAC companies than non-SPACs. I haven't looked at it quantitatively. If somebody knows, please be in touch with me. But I would give Jason Robbins control of my family trust. I mean, I would give Jason Robbins control over anything. So, business nature or personal nature. So SPACs are, they're not always what all of Wall Street loved. And I'm sure there's somebody out there who's somehow making less money on Wall Street because the SPACs are making some money. And I will tell you, the operators that form these SPACs deserve to be making some good money because they are in many cases, brilliant business people bringing together great companies with great capital and great advice. Most SPACs put one board member onto the operating company. So I feel it's not dissimilar to a form of a late stage, private investor, the same role to be played. Wouldn't it be nice to know if SPACs have been around, I guess, for quite a while, but they became, more popular in the last couple of years. But, it would have been great to have been asked on CNBC when I was asked about the Facebook IPO, how come they didn't do a SPAC? But nobody was talking about SPACs back then.
As we wrap up, probably our last question, our 76 Capital Leadership Series for you, is really this idea that I think we both ascribe to sort of a similar kind of view of the world. We love working with entrepreneurs. We love getting involved with the next thing, whether it's in the sports world, the gaming world, just the world of, anything that's new and innovative. But, when you think, kind of step back even a little further than that, how do you look at the world, and how are you trying to make the world a better place every day?
It's a great question. I did more pure volunteer work straight out of college and involved with a couple of national charities. I did take some DraftKings shares on which I paid pennies and took advantage of the United States federal tax system, which allows me to donate that to a 501c3 and create my own fund inside the California Community Foundation. I intend to add to that. I also just sent 1,000 shares of skills to the Strong Museum of Play in Upper New York State. I'm going to get killed because I want to say Buffalo, but if it's Syracuse, I'm in trouble. A really cool place. But also I want to stick on money for just briefly. This is a really important question to me. I used to be a fundraiser. I wish there were more moments in the year when I go to a woman sitting on a bench with a kid looking like they're not doing well, waiting for the bus. And I ask the kid, is your mom okay? And the kid goes, yeah, my mom's cool. We're cool. And the mom goes, thanks for asking. And you hand them $100.
Well, Mike, that's incredible. That's incredible. That's extremely nice. It's the kind of thing that I know that it's important to you, and that you are about, you talk about some of the nonprofit things, but I'll tell you, even from a for-profit perspective, talking to entrepreneurs like Ari, who we have in common at Maestro, and all the other individuals that you've mentioned, and even the ones that you potentially left out in this show, all of them feel like you're helping them, and that you're truly helping, them and their team and their families make them better people, making them build better companies. And again, what that all does is makes the world a better place. And I'm just really happy to have you as one of our guests on our 76 Capital Leadership Series.
I say with great sincerity, God bless you.
Well, Mike, thank you so much. It's been great having you as a guest on our show. And make sure that you go out there and you follow Mike at Mike Vorhaus on Twitter and across all the different places you can find Mike, because he's someone that you want to follow. You want to learn from him. You want to check out all the things that he does, all the companies he's involved with. He has been involved with a lot of winners, and there's a lot of other winners that you're going to see that have yet to sort of hit the prime time yet. So remember, if you're an entrepreneur, an athlete, a student, a business person, and you're thinking about starting a company, whether that's whether it's in the sports betting industry, whether it's in the esports, in the sports tech world, sports media industry, reach out to me, reach out to Mike. We want to hear from you. We want to talk with you. We want to see if there are opportunities that we can help you build a really special company. So once again, thanks, Mike. And I'm Wayne Kimmel. Thanks for tuning into this edition of our 76 Capital Leadership Series, and get out there and just go make it happen.